Hey, She Slayers, this is a special sample cut from this week's episode. If you find this interesting, be sure to make time to go listen to the entire episode released this past Sunday. And please be sure to help a girl out and follow or subscribe to this podcast. And you're
And you
definitely not getting paid what I see so many people complaining about when they're working for someone else, their fair value of like, I saw a reel from a private practice ENT. Like, so many of us, like, I feel like Kairos really have a chip on our shoulder that like everyone else is making so much more money than us. And I know you talk a lot about like the shame and guilt that comes with
Yep.
debt. And so like, I want to hear your advice or piece on that. But like, we just have in this our head that like everyone else is making so much more money. And this was a private practice ENT account I follow. And he was talking about like, it was like, oh, you see that Maserati out there? Yeah, in the parking lot. The Camry next to it is mine. And it was just like, if you went in to healthcare to be rich, the only people that are like super, super maximizing that have kind of needed to, and I don't want to like sell their soul and work for like a large bureaucracy type of thing. And, just sell their freedom, I guess, more
Yeah.
is a better way of doing it. But like, so when you're working with people who've been in practice 3 to 5 years, do you notice that there is this guilt feeling about their debt?
Yes and no, it depends on the type of debt.
Okay.
So, how you get to where you go makes a difference in your mental perception of it. And this applies across the board, whether you're starting up or you've been in business. If you are carrying, and I'll tell you, I had an attorney come to me and she had 6 figures in credit card debt.
Oh, that kind of debt. Yep.
That feels that feels suffocating.
Hmm.
And it was feeling suffocating. But when you can take that 6 figures in credit card debt and turn it into, let's say, a term loan. So the closest comparison is going to be like your vehicles are usually on a term loan. It's a set amount of money, fixed interest rate, set amount of time. You know exactly what you're going to pay every month. That feels doable when you've
Hmm.
got this set amount of money that you know you're going to do and it's going to be spread out over time versus looking at this $100,000 price tag. Because let's be honest, today's day and age, we all have this perception that debt is bad. It's mass marketed. You want to be debt free, you need to be debt free. And when you see a credit card, all you see is the payoff number. You
Hmm.
don't even pay attention to the regular payment amount because you know it's not doing anything. All you see is that $100,000
Right.
and it's suffocating.
So I didn't even know you could do that. So like can you turn a credit card debt into a term loan?
It's very similar to kind of the personal debt consolidation process.
Okay.
You would reach out to credit cards, no, to credit unions. I love credit unions over banks. If you've got a personal relationship with a credit union in your area, they tend to have better interest rates. They tend to be more lenient. They have less red tape. They're a little easier to deal with than like the Chase or the Bank of America of the world. I'm
Okay.
not even going to mention the one that has all the fraud because they're my least favorite people.
Is that Amex?
No,
Oh, good.
Wells Fargo is
I was
awful
like,
for
don't talk
banking.
about my Amex.
No, I have an Amex. Totally good with Amex. But so you go there, or there's smaller financial institutions like the BHGs of the world that will take that credit card loan and they'll give you almost like a consolidation loan. It's a term loan. It's not usually the best interest rate. You're not going to get the like 5, 6% interest. You're probably going to get like 11 or 12 or 13. But when you compare that to the 22% that is on a credit card, and you set it up, it's for me and for the clients I talk to, it's almost as much about the mindset and the way it feels to have a term loan as it is about the interest rate and the savings you're going to get financially. A term loan feels controllable.
Hmm.
A $100,000 credit card feels out of control. And that's exactly kind of circling back to what you asked. That's where the shame and guilt with debt comes in. When debt is intentional and controllable, you don't usually have that shame and guilt because you had a plan. You know you're going to pay it off. You're going to do X, Y, and Z. And it feels like you still have control. When it feels unintentional, when you had to run up the credit card, when you had to turn to a friend, that is where the shame and the guilt comes in because you you feel out of control, and that feels very personal. It feels out of control, and then it starts to feel insurmountable. And then you're back in this place where you're making decisions to grab every dollar instead of making decisions to grow and scale a business that fits your lifestyle and fits who you are.
So in that scenario, like, and where I could see a lot of people getting into this credit card situation is they graduated, maybe they practiced for a while, whatever. But they decided they wanted to start their business and they couldn't qualify for a bank loan. So they start a business on credit card. Is that kind of what you
Yep.
see? Now, is there like creative ways that you've seen for people who maybe their debt to income ratio sucks a little bit, and so instead of turning to a credit card, like, there's another option that they should try first?
Yes
Besides
and
just
no.
staying working longer and saving more money for your runway. Like, because that's, like, the responsible thing of, like, if a bank looks at you because, like, the thing is, like, gosh,
It's
somebody was
hard.
Mhm. I was, in a debate online, and please remember the question I asked you. I love how as the guest, I'm like, "Hey, this is your job to remember the question I asked you." We're coming back to that, I promise. But no, so I saw this debate online talking about how, like, chiropractors should be treated as, like, equals when it comes to, like, bank loans type of thing. And I entered, I was like, "Should I do this? Should I not?" But it's like, insurance companies and banks are in the business. Casinos, banks, and insurance companies are in the business of making money. So they don't have a chip on their shoulder about, like, we don't like chiropractors. We don't like, it's like, no,
Calculated risk.
calculated risk. They have seen too many of them fail and it's too much of a risk. And so, like, yeah, you're right. If you were a dentist with the exact same debt to income ratio, you might get a loan and whatever. But like, that's not based on you, honey. That's not like a personal dig. That's like a national situation with failure rates of chiropractic clinics. But to come back, so like you're in this situation where you're like, the bank's like, nah, we're good, and you're stubborn and you're not just going to work for another year putting away money to create your runway, but you're not going to do the credit card. So, what's your other good option?
There are other options. I don't know that I'd say they're good. And I don't think the credit card is bad if it's done intentionally with
Okay.
a plan. Interest rates suck, but
Mhm.
I'm more about where you are mentally with how you do this. Like, if
Okay.
you can afford the interest rate that's going to sit on there and you have a plan, you know how you're going to get this up and running, you know where you're going to go find your clients, you know what you're going to charge, and you know how you're going to pay it off. The credit card, if it is your only option, is not a bad option. There is nothing good or bad about debt.
Hmm.
It's the intentionality and the plan that go with it that create problems for you in the future or help ease your problems in the future.
Okay. Tell me more what you mean when you say there's nothing good or bad about debt, because you and I being the same age, I know that we come like, and this is the fact, like, our parents, like, to buy a car, like, I've heard rumors about like 20% interest. So it was like you didn't go like it wasn't
Yep.
really an
If you don't
option.
have cash, don't do it.
Exactly. And so now that idea that all debt is bad, would you call that like the Dave Ramsey
I
mentality
mean, it
almost?
is though, and it's I feel it ingrained in me. Like from a I've gotten to a place where as a business owner, I'm okay with debt, but on my personal, I'm like, we need to get rid of that. Like it's still
Yeah.
there.
Uh-huh. Yeah. Absolutely. My husband has to like, cause I like, I'll have these like freak out moments where I'm like, we need to be paying off our mortgage. And he's like, our mortgage is a 3% home loan. I ain't touch it. Like I am paying the minimum on that. And I'm like, yeah, you're right. You're right. You're right. You're right. Not all debt is bad. So where is this? Like if you were going to coach someone through creating some healthier boundaries with debt, what are some of the concepts that you would want them to like master, understand, or follow?
It is absolutely hinged on intentionality. The
Okay.
debt itself is just a tool, which is why it's neither good or bad. It's how you use it that is going to project your outcome, right? So if you go into it and you're using it intentionally, and when I say intentionally, that means I know that I know what my runway is. I know I'm going to need this much money. Yes, I can fit it on my credit card. And if that's the case, How long do I have before I absolutely have to bring clients in to be making these payments on the credit card? This is now my window, boots to ground, we got to get going.
You're
Or you,
literally running calculations. Like, you're
yes,
literally looking at when you say intentionality, like, okay, so by month 4, I'm going to have $17,000 on this credit card that has this percentage interest. And this is like, but this is how I'm going to go about paying it down.
yep.
Okay.
And honestly, I would flip it because no matter where you are when you start this, again, takes money to make money.
Hmm.
You're either, if you don't have it in savings, you're going to put it somewhere. But even if you have it in savings, you've got to run those same calculations or your bank account is going to run empty and surprise you. Like,
Hmm.
even if it's in savings, and that's why I say debt is just a tool. It's just a way to access cash. It's that intentionality that's going to drive the success or failure. And I say that knowing I hate the word failure, but it's going to drive the future outcome of your business.